So let's set a scene. The market tightens. Budgets aren't just scrutinized, they're basically frozen solid.
Uh-huh. And every single deal suddenly needs sign-off from 3 different VPs.
Exactly. So what's your executive strategy in that moment? Do you instinctively pull back, or do you use that resistance to sharpen your team?
That really is the defining question for sales leadership today, isn't it? Because the average sales organization, they panic.
Right. They cut resources.
They cut resources and they just wait. They wait for things to improve on their own. But the higher performing teams, they see a downturn completely differently.
They see it as an opportunity.
A strategic opportunity, a chance to build a huge advantage.
And building that advantage is exactly the mission for this deep dive. We've been analyzing the playbooks from top-tier sales organizations to extract what they are doing right now to ensure sales success.
And this isn't theory. We're talking about 3 immediately actionable insights tailored specifically for you as a sales leader or executive.
Okay, let's start with the first thing every manager has to get a grip on, which is activity.
The activity imperative. Look, you have to accept a fast reality. Market friction is higher.
Leads slow down, decisions take twice as long, deals just stall.
Right. And since you can't control the market, you have to control your response.
And that means doubling down.
Radically doubling down on activity. When friction increases, you have to apply more force just to maintain momentum. It's not about busy work, it's about compensating for that market drag.
We saw a really interesting data point on this. In past downturns, the teams that came out stronger, they didn't just maintain activity. They increased their outbound, their follow-ups, by a pretty staggering 20 to 30%.
Because they realized their competition was freezing up.
Yeah.
And that gave them permission to be everywhere. If a buyer suddenly takes 3 weeks to respond instead of 3 days,
You need more at the top of the funnel to compensate.
you need 3 times the opportunities, exactly.
But let me push back on that for just a second. If you tell an already stressed team to just increase activity by 30%, aren't you risking some serious burnout? I mean, how do you make sure that's efficient and not just noise?
That is the critical question. And the answer is you have to pair it with the next step, which is ruthlessness.
Ruthlessness.
Increased activity only works if you're applying it to the right deals. High performers refuse to carry deals that just provide, false comfort.
So we're talking about clearing out the dead wood from the pipeline.
Yeah.
But what are the advanced criteria here? What separates a deal that's just slow from one that's truly dead?
You have to go way beyond the basic no budget check. The best organizations use something we can call the absence check. 4 major red flags that mean a deal has to be culled from the forecast immediately.
The absence check. Okay, what's the first one?
First is the absence of an economic buyer who is identified and, more importantly, engaged.
And not just a user, not even a champion.
No. We mean the person who signs the check, the one who understands the real cost of inaction. If you haven't met them, the deal's a risk.
Okay, that's a sharp distinction. What's absence number 2?
The absence of a mutual close plan. And by that I mean a written plan. If you and the buyer don't agree on the specific steps, the dates, the approvals needed,
You don't have a deal.
you have a wish. It's just hope at that point.
I see how that discipline forces clarity. What are the other 2 absences?
Third, the absence of a verifiable problem of immediate cost. If the buyer can live with how things are for another 6 months without a real, quantifiable financial hit,
Then the deal will die in a budget review. Every time.
every single time. And finally, the absence of written confirmation of next steps. A vague email or a verbal "we'll talk soon" is just resistance. You need a firm, documented commitment.
That level of discipline must create incredible focus. Because you're not just cleaning up a spreadsheet for finance. You're freeing up your team's most valuable asset.
Their time, absolutely. Which was being wasted on those hope-based deals. A smaller, highly qualified pipeline closes so much faster than a bloated one.
Okay, so once you have that high-octane, laser-focused activity going, you've earned the right to have better conversations.
Which brings us to insight number 3, sharpening the value message.
Right, because when money gets tight, weak value propositions they completely collapse under scrutiny.
They dissolve. When capital is cheap, companies buy features because they might be useful someday. When capital is tight, they only buy solutions that mitigate risk or eliminate current costs.
So this is where the best teams totally change their narrative. They stop selling products and start selling, financial outcomes.
Exactly. They shift from saying, Our platform has this new AI feature to saying, this strategy reduces your operational risk by 18% next quarter.
They're quantifying the cost of doing nothing.
Yes, opportunity cost modeling. They're forcing the buyer to see that the status quo isn't a zero-cost option. It's a choice with a measurable financial penalty attached.
And if your sales pitch sounds the same today as it did last year, you're already behind.
You are already out of date, and making that kind of pivot, arguing that financial case, it requires real capability, which leads us to the investment side of this.
This is such a big differentiator. The average company sees a slowdown, tightens its belt, and the very first thing to get cut is the training and development budget.
It's the most reactive and honestly the most damaging long-term move you can make. High-performing teams do the exact opposite.
They invest more.
They coach more, they role-play more. They spend structured time reviewing calls, specifically focusing on how to handle that financial pushback. They use the downturn to upgrade their team's capability.
And what are they coaching on specifically? What are those non-negotiable skills for a slow market?
First, financial fluency. Sellers have to be able to talk about ROI and total cost of ownership. Second, advanced negotiation, especially resisting that pressure to discount early.
And what's the third?
Complex deal structuring, knowing how to build a multi-phase deal that aligns with how budgets are actually being released now, not just forcing one huge commitment.
So the smartest leaders are using this quiet period to actively make their team better. They know their top performers want that challenge, and their middle-of-the-pack sellers desperately need the help to survive.
And that all points to the philosophy that underpins all of this. Slow markets don't create weak sales teams.
They expose them.
They expose the weaknesses that were already there, just hidden by high demand.
Which means the executive's job is, above all else, to protect your standards.
Exactly. Standards are the immune system of a great team. And that means refusing to do things that get you a short-term win but cause long-term damage.
Okay, give me some concrete examples. The pressure to close something at the end of the quarter is immense. What does protecting standards look like in practice?
It means no huge early discounts just to get a signature. That kills your pricing power forever. It means refusing to chase a bad fit customer, even if they have a budget, because they will churn and become a resource drain.
And I imagine it also means refusing to overpromise on results just to win the deal.
Absolutely not. That just creates a toxic relationship that your customer success team has to clean up later. One bad deal, bad fit, deeply discounted, overpromised, it costs more than 10 lost deals.
Okay, so let's zoom out. If a team is doing all of this, what are they doing behind the scenes? What's the long game here?
They are building infrastructure. They're using this time to focus on the foundational hygiene that gets ignored when everyone is just chasing revenue quarter to quarter.
What's on that executive checklist for the quieter periods?
It starts with CRM data hygiene. Making the data truly clean so your AI and automation tools can actually work. They're refining their onboarding programs, they're meticulously redrawing territory plans, and building multi-quarter account strategies for their key clients.
So they're building this invisible engine of efficiency. So when the market turns, and it always does,
they're ready to hit the accelerator instantly while their competitors are still dealing with messy data and unskilled sellers. That preparation is everything.
So for you, the executive listening to this deep dive, the takeaway is what? That high-performing teams do fewer things, but they do them better. Every single day.
That's it. They prioritize quality activity, ruthless focus, and investing in their people. The choice you make today really defines your trajectory for the next 3 years. So do you retreat or do you sharpen?
The only thing more expensive than investing in your sales team during a downturn is trying to catch up once the market has already taken off without you. For more insights on how to build that high-performing team and achieve greater sales success, we really encourage you to dive deeper into the full analysis from the sales experts.
You can find it at thesalesexperts.com.
At the end of the day, it's about taking control of what you can control.